Hello and welcome to the Core 4 Show. I'm Coach Brandon Adams here to bring you guys another fantastic journey for the Core 4 family and team. Let me just talk a little bit about what Core 4 is so that we can kind of get an idea. Because a lot of times every week, I had some wonderful conversations with people this week that were very complimentary to what it is that we do. Our goal is to keep money in your pocket. And how do we do that? Number one, and I want to make sure we understand this, is you have to have self custody. In order for it to be a core four venture, for the most part, we're looking for you to be able to keep money in your wallet, whether that's a broker that you have a relationship, that you've chosen to have a relationship, whether that is a wallet that you have that you're managing your money through, whether it's Coinbase, whatever it might be. The whole idea is that you are managing your money. And let me just give you a little history. I've lost hundreds of thousands jumping into opportunities that I thought were vetted. So we have what's called the Core 4 coefficient, which really will help you. And I appreciate all of you guys that reach out to me and actually ask me for the Core 4 coefficient so that you guys can, really step to the mark and make an educated decision about how much money you're actually going to invest and, really the direction that you want to go with it. Like, are you going to put 100% of your disposable income in? Are you going to put, 50%, 20%, whatever it might be? And we're just telling you the journey that we use here at Core 4. So you can go back and look at some of the other videos and you'll be able to understand a little bit more about what we've done. But number two, and this is really what's most important, is we have four things that we work on in Core 4, and that is mindset. The second thing that we work on is how to understand, can we get rid of our 9 to 5? Can we figure out a way to control the time that we have and how we make money for a living to feed ourselves and our family and to help our friends? And then number three, investments. Investments can be short term, investments can be long term. And what we work on is active and passive investments. And we'll talk a little bit about that more a little bit later. And then finally, we look at retirement. If you take a look at inflation and you take a look, really at some of the other economics, and, we have an unbelievable team that can talk to you a little bit more in detail about it. But if you take a look at the way that things are moving, are you going to talk about how many elderly people over 55, 60 are really still at work because they can't afford to live on their retirement? And so the idea is that, yeah, you could say that's bad, that's good, whatever, however you want to look at it. The whole idea is that what is it going to do for me? And so I've got to replace my family's income. So we created Core 4 to share our journey and to help everyone to understand what's possible out there besides just, some of the things that you might be used to, whether it be the investment opportunities that you might have heard. You might have heard some. We have incredible insurance strategies that we can talk about and we've done on our show before. And James is going to talk about, hopefully, he'll mention a little bit of it today. But there's so many different ways out here that you can create wealth for yourself and not just go the traditional route. So our goal here today and every day is to help you to understand how Core 4 can basically help guide your journey. Are we going to force something on you? Are we going to call you and beat you up about joining something? No, because we're not really into anything that's dealing with affiliate marketing. We're not really into anything that's team building. If you can build a team or Core 4 can help you to get a discount, that's great. If we can give it, sometimes we can't get you a discount on a great opportunity or a great project, and that's okay too. So the whole idea is, how can you create wealth? How can you demonstrate that in your life? And if other people love the journey that you're on and they ask, then maybe you share with them how you're doing it. And then maybe again, maybe you don't. So we have an incredible team. So on our team is James Bishop, Chris Pulver, Eric Majors, Sonia Bird, India Bradford. For those of you guys that know any of us, the whole idea is that each and every week we present ourselves to you so that you guys can learn a little bit more about who we are. See the sincerity, see the consistency, see the expertise. Each of the panel of leaders are really subject matter experts. And so when I talk about what subject matter experts mean, it's somebody that's taken the time out to actually be able to have more than just conversational, um, like mastery over a particular topic. I'm looking for creativity on a topic. And unless you have the real fundamentals, you won't have creativity. Creativity is what's going to help us through the evolutions of the changing markets as they happen. If you're not a subject matter expert, you could be a case study expert from 20 years ago and talk about what's happening. But if you can't apply the skill now and show some creativity and be able to bend and adjust as the markets are adjusting or as opportunities present themselves. I mean, if we think about it 15 years ago, there was no such thing really as being able to really get into the Forex as easily as we're into it now. The yield farming and so many other things, it really just wasn't as easy to participate as it is now. And so hopefully we have a wonderful team that will help you to identify, even though it might be easy for us, but to help you identify how you can get involved as well, if that's your choice. So without further ado, we have what's called the core forecast. And the core forecast allows you guys to really understand what's happening economically and what's happening in the markets. And so we're going to bring on Chris Pulver, and he is a super subject matter expert. And so it's fascinating to hear him talk. And if you take a look at where we started in January and where we are now, he's changed so many people's lives just by understanding where the market is going. So let's bring on Chris.
Hey, Brandon. Happy Sunday, everybody. How are we doing?
Good, man. I just want to let you know that I retired my clubs. I saw them a couple of weeks ago. They're custom. And now that your arm is not feeling so good, I've decided that I'm going to come out of retirement and I'm going to play you.
That's good. I did play twice last week. And my first round back for the first round of 2024 was 3 under par. So I think I still got some game.
Okay, never mind.
And I still actually surprised myself with some distance. I got a couple out there like 330, 340. So I know James would appreciate that. So
even though this is recorded and it's live, what I've decided to do publicly right now is to retract that earlier statement. And so
I mean, come on, dude. Let's come on, retirement. Let's go.
But I'll play you on some video games.
There we go.
Yeah. But let's get everybody going here. So hold on. Let's bring this up. I'll see you soon.
Sounds good. Thanks. Hey, everybody. Happy Sunday. Welcome to the Core Forecast. You're looking at the heat map for the last week's performance. The markets don't care that we had a holiday. It was a July 4th disruption for Thursday with a holiday week, but really all the market used was that day to pause, give thanks, and then rip higher on Friday with all your major kind of household names and story stocks leading the way. So Microsoft up, Apple up, Google up, Meta up, Tesla is up 27.4% in the last week, just surging higher. And you have to remember, Apple and Tesla were in a terrible situation coming Q1. Look, if you go back and watch anything that we did with the core forecast in 2024, you will see that we were pretty bullish all year. The market really pivoted hard last October. That momentum carried us into Q1. We had a bit of a pullback when we finally rolled into April. That pullback was met viciously with more upside, and that upside has not relinquished anything. So we are sitting here at 554 on the SPY. On the SPX, we're around 55.67 with the close as of Friday. That brings into mind 5,600. I'm throwing out the same thing. It seems long in the tooth. It seems overextended. I think that the upside right now, if you are just straight up bullish, I do think you are going to have some bumps and bruises along the way. I do think that there is less upside as far as the quick correction. But I'd say to make this really simple, we just had 3 strong days in a row in the SPX. Right now, that floor to me is 54.46. So if you want to make a note, if we don't take out 54.46, these bulls are hanging in there and hanging in there pretty firmly. So if the bears, however, let's say that we start out this week's trading with a nasty red day. I don't know what day it is. It doesn't matter. Obviously, I don't have a crystal ball, but I would say that if we do breach and break below this 5,445 level, that we are subject to a decent correction. We have not had a 2% day to the downside in over 378 days, or I think maybe Friday last week was 377. So the stretch has continued, but don't let that feel like, oh my gosh, it's impossible. We have had periods in this stock market that it has been over 1,000 days without a 2% sell-off for one single day. Now, we can have sell-offs. We had, 1+% on some of these days here. We didn't have a 2+% day, but yet we still had a 6 to 8% correction. So don't make a mistake by thinking the market doesn't pull back. No, it does. It just might take a couple of weeks to give us the percentages that we're pulling back. So, like I said, right here at 54.45 would be the floor on the SPX. If you're looking at the SPY, that floor would be right around this 542 level, 542 and change. If you go to the Dow's hanging in there. I mentioned last week on the Core 4 that I see this as a bit of an ascending wedge, which would look something like this. If we connect these lows and we connect these highs, that if the bulls continue to tap this upside, that we could blow this top off. The concern, of course, is that we don't necessarily blow the top off, and rather we end up coming back down into a corrective zone, retesting this level. We had previous all-time highs back here around 365 to 370 on the DIA, which would be a bit of a correction, obviously. But if the broad market stays firm, the Qs, of course, blowing up new highs. We had a bit more volatility on NASDAQ and the tech market. So I'd say that the floor is probably going to be somewhere around like 475. I'm going to set a chart on right now while I'm looking at it. 475. So if that floor breaks, I'll be more interested in looking for some protection. The first thing I'm going to be doing is adding to some of the insurance plays that I have in my portfolio. I'm going out probably 45 to 60 days. I'm going for cheap puts, and I will probably buy SPY puts, or I will buy ES futures, which is the S&P futures market. I will buy some very cheap out of the money puts that allow me to hedge probably 50K or 100K on every account that I have. So if I do have a drawdown, it's essentially paid for. And I'm also looking to play the VIX over the next couple of months. I have some August expirations on the VIX, where if we have a surprise to the upside, if VIX spikes up to 20, that might be a 25 to 30% correction to the upside. But one thing that's interesting is volatility is a mean reverting instrument, but the stock market doesn't have to be. So for us to say, well, tech has been outperforming, or large caps been outperforming small caps, we don't have to have a mean reversion. Historically, it does happen, but we don't have to. But volatility, on the other hand, we have expansions, we have contractions, we have lulls in volatility. And right now we are sitting in this very eerily low position where we're just sitting right around these, not historic lows, but near them. So a surprise volatility event, a surprise, I guess like a credit event or something that maybe breaks messaging of the Fed. I don't know. The market is certainly humming along nicely. Right now, I did look at the rate cut probability from the CME Watch tool. It has gone up steadily all year. The market's now anticipating over a 70+% chance that by September, the Fed is going to be cutting rates. So July, you can see here that this is the end of the month. We do have CPI data this week, I'm sure James will touch on, but 93.3% probability that nothing changes for the Fed in July. We have Jackson Hole in August. That will set us up for the big old rate decision coming in September. Right now, the market's anticipating that there's still going to be one cut in September and one cut in December. Now, there's all sorts of commentary that comes with that. Is that the right thing to do? Is this the time to be restrictive? Does this mean the market's going to top out? What happens to the inverted yield curve? Blah, blah, blah. I don't know. Okay. But I do know that a combination of Fed making some decisions, making some cuts or not making cuts ahead of a very contentious election this year in the U.S., buckle up for some volatility come Q4. Usually August, September typically slide. It's called the September effect. We kind of come out of the summer lulls and summer low drifts or whatever, what have you. But I would expect that September is likely going to be some profit taking, likely going to be some tax loss harvesting, probably the narrowing of exposure coming into Q4, because we don't really know if it's going to be another blow off top to the upside and everything's great, or if Q4 is rough. I have a lot of concerns going into 2025 that if we have a bad Q4 going into 2025, I will certainly be playing more downside than upside as a roll into 2025. So just some interesting stuff here. We blew the top off here on Thursday to Friday, or I'm sorry, Wednesday to Friday, rather. That was the only direction we had. And then taking a look at the charts here, just a quick glance. So the SPX up to highs. You can see these little red lines connecting my highs. That is still overbought conditions with divergence. But like I said, rather than calling the top, what I'm doing instead is I'm just looking to see if the floor can break. If the floor breaks, I do have some really easy plays to the downside. It looks like this. basically I'm giving myself a cushion. I did this on the E-mini futures market. So if I go to ES right here, I have some trades running right here that as long as this market stays above 5,100, I get paid, right? And furthermore, it was about a $300 hedge that could pay me $4,000 on my account if that trade comes to fruition. So if we do break those lows, I do have some really good insurance to that side. I also get paid about a 10-1 or better. And again, if I'm hedging and I lose, well, that's fine because the entire portfolio continues to melt up if the market continues to go higher. So it's a lot of times when I quote hedge, I do so where I actually have a paid hedge. I have a credit hedge. It doesn't cost me a lot of money to do so because typically when you're hedging, you are just paying money for insurance. Speaking of insurance, I think this is a good transition into James. But what I'm going to say is this: watch those floors, watch those levels. If I'm going to be bearish, the market has to prove it with price. That's going to be the tail of the tape. That's going to be what's right in front of your face. Don't guess. Don't anticipate. Don't trade against what you see. Right now, this market is ignoring a lot of geopoliticals, a lot of uncertainties. But if it can't break lows and can't break supports and can't show us any real bearish confirmation, then don't force the trade. So I'm playing both ways right now, but right now I'm remaining to the upside, at least until we have the rate decisions in September and then a volatile Q4.
So let me ask you a question. That was excellent. So with we're talking politics a little bit. I mean, do you have a forecast on if one president wins over, our former president? Do you have anything else?
Honestly, I don't think it's going to matter either way because I think that, the one thing that the market doesn't like is it doesn't like policy change. And so if we have, if it's a Republican sweep, I think that's where the market's going to take it, run with it. And it could go either way because it could be a big sweeping change in administration and change in policy, or it could be a positive thing because all this, if it's a Republican sweep, then it means there's going to be spending, there's going to be deregulation, there's going to be corporate cuts and tax cuts and all these things that might be better for bottom lines. So it really is a toss-up. I'm trying to stay out of the politics stuff because I don't trade politics, I trade policy. And like I said, right now we essentially have gridlock. The markets tend to like gridlocks where we have, Senate, House divided, political affiliation doesn't really matter. One can argue that the Republican side historically has performed better, but it's within like 1%, 1.5% historically speaking. So the one thing that we talked about early in this year, the core four, was during an election year, the average returns are 12%. Okay. Right now, the market's already up 16%. So if we stretch any higher, it's going right along with what you see in a typical presidential debate year, which is whether the incumbent wins or not, it's a presidential election year. Market doesn't really care about much of anything until it has to. And so that's why I'm saying I'm going to try to concentrate a little bit more, be omnidirectional when it comes to Q4 protection. And I'm going to buy stuff that doesn't cost me a lot. If I'm going to get a hedge position, I'm going to get paid, 10 to 20 to 1 because I wanted to make sure that it's going to cover a chunk of my portfolio. I may not, I really think I can position myself in such a way that if we have a nasty turn in the market, where I said Q4, if Q4 ends negatively, I have a lot of concerns going into 2025 because I feel like that's going to be another kind of slap in the face in reality for the market as there's going to be this major shift from, overvalued tech and more volatile tech to if the Fed doesn't cut quickly enough or the market doesn't think the Fed's going to cut quickly enough, it's going to be a combination of a lot of things, Brandon. It's going to be political. It's going to be monetary policy. It's going to be fiscal policy. Either way, whoever steps in as president or whatever party has control, fiscal policy is not going anywhere. The government is going to spend money. I don't care if it's Trump in office. I don't care if it's this austere, Republican Party. There's no way that anybody's getting in power if you're saying you're going to go against, cutting taxes or you're talking about raising taxes. Nobody's going to have a platform to raise taxes on the American people. Nobody's going to have a platform to cut spending unless people are finally caring about the debt. But we're not going to print money. We're still the world reserve currency with one of the most powerful central banks in the world. And I don't like that, but that's just kind of the reality. So you can't be a politician if you're going to talk against the grain and swim against your party lines. And therefore, I just think that either way, fiscal policy is here to stay. And that's really what has been pumping these markets since the recovery we had in late 2022, all into 2023, even into now. This is all fiscal policy with the Fed that is paused. And so if the Fed's going to start playing games and cutting, the Fed better hope that inflation doesn't rear its head, because if inflation ticks up, and this is what James will touch on here, we do have inflation data this week for the Fed. We have CPI data coming on Thursday, the 11th. And so the market, believe us, is looking at what that reads. It's showing 3.1 year over year. If the market is getting a pleasant surprise and that thing reads at 3.1 or sub 3%, inflation continues to trend, it would make some sense that the Fed rate hike or the Fed rate cut is likely going to be materializing in September. So to get back to your question, I don't think it matters who wins, man. I really think that the market's going to take it either way. And I think that as far as what the market prices in, that's where I'm not quite sure, because I think right now the market's priced in all these things, but the market hasn't necessarily priced in a Republican sweep or somehow Joe Biden making it to election. There's talks about him bowing out. There's talks about him struggling, whatever, man. I don't want to turn it political, but I don't care. It's like, to me, this is like the lowest point in U.S. politics. If you want my opinion, that's my opinion. I feel like this is a disgrace for us to have, two octogenarians to vote for, and this is as good as it gets. These are the choices we have. So to me, it's embarrassing. But there's elections going all over the world, and at some point, you'd like to see that your vote actually matters, and we can, stop voting for a bunch of clowns. So that's me.
On that. That's great. That's great, Chris. Thank you.
Yeah.
You want to talk any trash before he's gone?
All I have to say is just write me in. Just write in me for president.
James, I will gladly do it. I would write it. I mean, Dwayne Johnson, Tom Hanks. I don't care, man. Like, give somebody that has some credibility and some likability. Like, I mean, I would take I take a Kardashian at this point. I don't care.
Oh my gosh. Kristen Thompson, are you listening?
Oh my gosh. You heard it here first.
It's about that. Maybe James Harden cares too. Anyway. All right. Thank you, Chris. All right, buddy. You got some stuff to talk about, man.
A whole lot. So I'm going to share my screen too today, if that's possible.
You can. All you have to do is just.
Yep, I got it. All right. Let me share this entire screen, and I'll slide that off. All right. Perfect. So a couple of things I'm going to talk about here today. We got a whole lot has happened in the last couple of weeks, and we're going to talk about a few different things. Some things I see on the horizon, some policy decisions made by Congress, some economic factors going on. And I'm going to actually start, and look, I'm going to say this. My job is just to give you the information, and then I will tell you my opinion of that information. What your opinion may be different. Chris's opinion may be different, but it's all up to you to decide and what to do and how to act. And then at the end of this, Brandon, if we got a little time, I'll definitely talk about how to protect yourself. So, okay, beautiful. So July 2nd, we had Jerome Powell come out and speak, and then JOLTS job openings. That's the job openings in the U.S., 8.14 million. That's an uptick. And then if we go to July 5th, the day after the holiday, we saw the unemployment rate, right? Non-farm payroll got better again. We were forecasted 191,000, came in at 206,000. But look at June, okay? June was revised down from 272 to 218. And, who knows if there's another revision coming. And then another interesting thing, unemployment rate. If we look back and we go back to February, 3.7%. March, 3.9%. April, 3.8%. May, back to 3.9. June, 4. And now we're at 4.1. You want the unemployment rate to go down, typically. That's good for the country. We're going to talk about some of those impacts and a couple of things in just a second as well. The first thing that I want to discuss with that is GDP. So I didn't get a chance to talk about this. I was gone that week for the GDP discussion here. And we came in and we were forecasted 1.4%. We came in at 1.4%, but the previous was 3.4%. So a full 2% lower. Then when you break down GDP, so I'll write this out with this tool that I have here. GDP is a formula. It equals consumption plus investment plus, and that's foreign direct investment, government spending, and then net exports. Okay, so you can look and all of GDP will break down different things. Now, one thing I'm never afraid of is the government knows how to spend some money. Like they know how to spend money they don't have, they won't have for 20, 30, 40 years. They just know how to spend it, right? They know how to write checks. Foreign direct investment, right? If that remains flat, consumption, that is the biggest part of GDP in the United States. So every country has different factors of GDP that lead their country. So let's say for India, China, they are both manufacturing countries, so net exports are very important. Germany, net exports are very important. In the United States, consumption, the biggest part of consumption is healthcare, and then spending, defense spending, and then our own personal spending. We'll talk about that here in a second. But that's what GDP equals, right? It's just it's literally just a formula. Well, when you break down the formula and you start to look at certain parts of it, right? You have durable good orders minus transportation month over month. That went from 0.4% to negative 0.1%, right? You go through and you look at retail inventories, went from 0.2% to 0%. Then you get down here to corporate profits. All right, this is a big one right here. Corporate profits, quarter over quarter. We were forecasted previously. It's funny how they revise these down as you go, but if you looked at the previous month, we were forecasted to be at negative 1.7%. The previous before that was a positive number supposed to be, and that came in negative. And then this came in at negative 2.7%. Yet we have the stock market running up higher highs and higher highs, which is fueled by tech, which we know. And it's just a very interesting thing that you have companies, Target, Walmart, grocery stores, posting record low profits. You have clothing stores, record low profits. Hermes, LVMH Group, lower profits. All of these big things where not just luxury items, but also regular items that we need day to day, people are posting lower profits because people are feeling it. But yet the stock market is running up, which is an interesting factor. Now, the last one that I'm going to call out from this is this right here. It comes out 10 a.m. right after GDP, pending home sales month over month and year over year. So the previous, and then we're going to add on top of that, right? So previous, we had negative 7.4% year over year and negative 7.7% month over month. Then this month, so for the month of June, I should say, we had negative 2.1 and negative 6.6. So while things are blooming in the stock market and booming in the stock market, as well as the Forex, as well as in other areas, we're also seeing an interesting divergence and dichotomy with home sales, profits, GDP, and different things beginning to fall. And one usually precedes the other. Now, there is, fortunately, I learned to trade technicals, and I believe in trading what you see more than trading what you know or the news tells you. But I also believe that fundamentals eventually give the market a direction, and then technicals give it a destination. That's the beauty of myself getting my MBA and working on my doctorate now in finance and economics, as well as being a trader as well, is marrying those two things together. And I'm seeing a story that is building for a pullback in the market. 10, 20%, who knows, but a pullback for sure should be coming. Now, the next, but it's not all doom and gloom. There's great opportunities. There's one of the things that I was been looking at is a company called Terra Power. Now, this is the energy.gov, okay? This is a brand new commercial facility that was just flicked on in Georgia. This is a new nuclear facility. Now, Terra Power is the company that helped build this reactor, and it's done very differently. And I'm going to give you guys a little homework. If it's still out on Netflix, look up Inside the Mind of Bill Gates. It's a 3-part documentary, but the third part, I believe, is about energy. And what was interesting is Best line I ever heard was he funded a company, and these guys basically wanted to revolutionize nuclear energy because they knew they could make it safer. And the CEO of the company said, the reason why nuclear power doesn't work today and there's such a fear of it is we're using 1970s built power plants that were designed in the 1950s using technology from the 1930s. And when you start thinking about that, like, I mean, my phone isn't from the 30s or designed from the 70s. You know, my computer isn't. Nothing we do is. So why hasn't this been updated? Just because the investment wasn't made there and people didn't choose to invest in it. And so we're seeing the U.S. is going to be adding 4 more power plants. The state of West Virginia is looking at putting in into another nuclear power plant. And these power plants have the ability to, 1, lower cost of energy for consumers, but 2, take over and create and generate the energy needed for the U.S. Now, TerraPower is going public this week. And I believe it's this way. I can't remember their IPO date. It literally just escaped me. But TerraPower will be going public soon. So that'll be an opportunity for people to invest in. But what I will caution is, generally at an IPO, it shoots straight up because everybody who couldn't get it early, they want to get in it. And then you'll see 3 to 6 months when the ability for the CEO and investors to sell their stock, that comes in. You look at the S1s, you'll see that, hey, there's a few million shares are going to be sold on a certain day. That's when you pounce. That's where your opportunity is. Don't be a sucker. Look, in a world full of lollipops, try to be sucker free. You don't want to be the sucker that gets caught in the up and then the big drop. Watch the up. When it drops, start building your position there. That's something that I would caution against. Also, 2 days ago, we had Britain's left party. So they're what you would consider the Democrats in Britain. They were elected, taking over from a former hedge fund manager turned prime minister in the UK. And so we'll see what change comes about in the UK. The other couple of top stories that I want to talk about is Tesla. We were discussing this earlier, but Tesla, they didn't deliver as many cars as they wanted to, but they still over-delivered what they expected to. Another thing that came from that call is Elon said, hey, look, if you're betting against Tesla, it's going to be a bad bet soon, because when we get our AI and our robots up, we are going to be one of the most profitable companies in the history of the world. And what does that mean to me is that, hey, well, I'm going to replace all my labor, my biggest expense, with as much of it as I can with robots as quickly as I can. Another thing is, this is again going into that retail and corporate profit side. Saks Fifth Avenue, their parent company, HBC, they are acquiring Neiman Marcus Group. So Neiman Marcus is being bought by Saks and their parent group, which I think it's Macy's as well. No. Sorry, that's Dillard's. But so you're seeing consolidation amongst retail because some people are exploding and some people are imploding. And so this consolidation is, to fight back against the Amazons of the world and hopefully make a little bit more profitable company. But also we're seeing just corporate profits being down, which is the right time for companies to acquire other companies if they have the capital. And then that's pretty much it from the news side of things.
I love it. So did you have some insurance you want to talk about?
Yeah, that's I hate painting the doom and gloom picture. I really do. It's not me. You know that. I'm generally a positive person and have a positive outlook. And in down markets, that's when the most millionaires and billionaires have been created in U.S. history. And there's there's a very simple way that you can protect all of your retirement from downside risk. And if you want to talk more about that, you can either email Brandon. I believe your email goes out to everybody. They can email you directly and you can put them in contact with me, or I can give my email as well. It's jbishop@onelifefl.com. and you can just put you're a Core 4 member, and I will make sure you are a priority appointment for myself and my team, and I want to make sure to inform and help people the best they can. And this is a literally what's called a 0% floor, which means, let's say right now you had $500,000 in your retirement. If the market fell 30% next month, you would still have $500,000 in retirement. And that's one of the most beautiful things you could do while earning 16 to 18% per year in return.
So each week I want to make sure that we mention that, because people have to hear this over and over and over again. We have to change our mindset.
Yep.
And that's one of the core 4 principles. And so most of us don't know that as a root. And so we kind of have to get used to it. And it's a little intimidating for some that I've talked to about it. And, for a lot of people, they don't really know how to navigate the space between investments and insurance, right? Because it's been kind of taught to us that there's two different things. So perfect. Thank you.
Absolutely. Thank you.
All right. So guys, listen, we now going to go over to the Core 4 report. At the end of the day, our job is to share with you our journey. And what does that journey look like? Looks like a couple of things. The first thing that we have to learn is, what is it that we're trying to do? Are we active or are we passive investors? And so for me, I run a basketball combine. I love it. I'm absolutely excited. We start back tomorrow. My kids are involved in it. And so I'm watching them grow. But more importantly, I'm watching them watch themselves get better. And so that doesn't leave me with a lot of time to be looking at the markets and all the rest of the stuff right now. So we have bots. So we have the Core 4X bot. And so that's available for $1,500, and that's getting lots and lots of pips every single day. All you have to do is contact me by telephone, or you can contact me by email, and I'll actually bring up our computer. The next thing that we have is what we call Coinbase Trader. Coinbase Trader is amazing as well. And by the way, our Core 4X bot is actually 100% automated. So you don't have to do anything, but guess what? It's also self-custody of funds. So nobody else touches your money but yourself. So just collect your pips, for all those that understand what I'm saying. Number 2 we have is Coinbase Trader. What I love about Coinbase Trader is it's a little bit different. So in this scenario, what we offer is, and it's $34.99, and that gives you a 3-year license. But what it offers is a way for you to actually create a relationship with your Coinbase account and the Coinbase Trader, and it actually buys low and sells high. But when it's buying low, even if it goes lower, you still have an asset. Whereas for us, it's a little bit different, because if you lose, you hit your stop loss, whatever it is, then yeah, that's a problem in terms of, it's got to fight to get the money back up. Well, in this, you never really lost the asset. So let's say you wanted to accumulate Bitcoin and it was however long ago, or Ethereum. Well, it could actually just be accumulating in the bear market. And then once the bull market hits, then bam. I mean, all of the investment that you put in is still profitable, and it's buying when it's technically low. So pretty good deal. The next thing that we have that we're really super excited about is, and this is great because you guys are about to visit with Eric, is yield farming. Yield farming is a fantastic way for you to get from where you are to where you want to be. Now, this is a little bit, it's active. It's not super active, but it's active. And I just want to give Eric just a few minutes to talk and share with him, with us a little bit more about yield farming. Hey, buddy.
Hey, guys. Hey, man. How you doing?
I'm doing all right.
So yeah, yield farming is essentially you're just supplying liquidity to the major DeFi decentralized exchanges, and there are billions of dollars per day being traded in those exchanges, and that's not like your FTX or any of the exchanges that could potentially have problems. It is DeFi decentralized exchanges where there's transparency. There's nobody between you and the trades. It's all done through smart contracts. So there's the benefit of a great degree of safety in there. And basically, you just buy coins, you put them in, and they pay you to facilitate the trading of other people. So if you're sitting there holding Bitcoin or you're sitting there holding any positions, it behooves you to place them into liquidity pools, well, you'll earn quite a bit of interest. And how much are we talking about? I mean, if without very much effort, if you just want to look at your account maybe 2 or 3 times a week for maybe 15 minutes, you'd be doing anywhere between 5 to 10% a month. If you want to get really aggressive and look at it, maybe 10 or 15 minutes a day. I've had months where I've done 30%, average about 15% to 20 if I'm looking at it every day in returns. So it doesn't require you to sit in front of your computer all day. It doesn't really require you to have an active knowledge of what is happening in the markets. If you don't want to do any of that, you just put your money in and live off the trading of other people. So that's what I do for a living now.
I love it. And so your course is $650 through Core 4, and I think it's $3,000 outside of it. So thank you for sharing with the Core 4 family. I tell you, I've been trading with you now for about 4 months, and it's been ecstatic. Like, I'm overwhelmed. It's thrilling. It does require, like you said, 10 to 15 minutes to be able to get those results if that's what you're looking for. But I'm satisfied to be able to kind of not just set it and forget it, but just to check it every now and then. And then also what I like is the fact that even if I'm in a particular trade, if I feel like this particular opportunity is going to then reverse and go back because maybe it's in a drawdown or it's in a cycle where it's actually going down, that it could eventually go back up. So fantastic.
Yeah, that's the other thing is that again, I don't really have to pay a lot of attention to the markets and what they're doing. I just am focused on how much commissions am I making off of the trade, buying and selling of other people.
I love it. All right. Well, thank you. I appreciate you, and we'll see you next week.
Appreciate it.
All right, guys. So, watch the journey unfold. What does that mean? We also have, and that was a active opportunity, but I want to go back to, a passive opportunity. And then also we're going to talk a little bit about our case study, which is Miracle Cash and more. But we have what's called Kong. Kong is another bot that's out here. And one of the things that we like about it, and we're actually going to have the Core Forex bot that's on FX Blue or my FX book. And this is basically a third party where they actually can audit and review and make sure that what you are sharing with the world is accurate. And so anybody that knows about FX Blue or my FX book knows that you guys can go and take a look at that and watch and look at the history. You see the good, the bad, the ugly. And I've tried to work with my FX book, was it last year? And so it was really ugly because we had some traders that really needed to learn from Chris and James, but it's okay, and so it's a part of the learning process. It's a part of the journey. And so, it doesn't matter where you were, right? Like, losing money or you were in bad investments or whatever. It's a matter of where you're headed. And so for at least myself and my community, we're headed to a whole new platform, a whole new direction. And so the Quantum Core bot, Kong bot, is amazing because in the last 468 days or whatever it is, it's done about 1,100%, and so they put a $12,000 investment in. And so they took only the profits and allowed the $12,000 to do the work. And so the bot has been able to generate about $150,000 in profit over the last 400 and some days. So that's pretty fantastic. And that's another opportunity for you guys to set and forget it. It's $12,000 for you guys to be able to get the bot. But if you're a Core 4 member, then obviously we get discounts in this situation. We don't get a discount on the Coinbase Trader, but we do get a discount for our community here. And then you also have to pay a monthly fee, and that monthly fee is waived. And so I'll let you talk to Mr. Harris if anybody wants to talk to him. You guys set up your relationship. So I will be releasing in the description. At some point, we'll be releasing the FX Blue that you guys can watch on a weekly basis. And at some point, we may have a show where we just dedicate it to just each of our particular projects. So this would be one of them. And finally, in watching our journey unfold, the next thing that we're involved in, and I tell people this all the time, I want you guys to know that I am not here to advise you on putting your money into any type of business platform or whatever. You notice James didn't do it. You notice that Chris didn't do it, right? So we can tell you what we're doing. And so one of the things that I'm doing is Miracle Cash and More. And I'm using that as a case study for all of us because, what if we would have gotten involved in Bitcoin? What if we would have gotten involved in Ethereum when it first came out? I mean, we'd all be billionaires if this show had started at that point, and we were able to kind of just dollar cost average and just pick up some Bitcoin and just pick up some Ethereum. But it didn't happen like that for at least me and some of the people that we have on this call, but it has happened for many people. But what's unique is that there's always something new. There's thousands and thousands of different coins that are coming out, all the rest of that good stuff. And so we're entering into a bull market. And so this business has created something called the Phoenix token. The Phoenix token has a value to it. I think it's around 20 cents. And it's on some of the exchanges now. They actually have their own leveler exchange as well. So you can trade with them. And that creates fees, some of the same fees that you guys heard Eric talk a little bit about, how we make money off of the fees when people are just doing their transactions. Then there's nodes. And so the nodes actually create more tokens for you, and so you have a node that's creating more tokens and transactions are happening. You're getting paid. In addition to that, they have some real estate. They may have a casino that I think that they're in the works of releasing. But the beauty is that you might want to just take a look, and we're going to have Alton on to just kind of talk a little bit about it one day in the next upcoming Sundays, and just talk to us a little bit about why he chose to get involved in what the company has been doing, the good, bad, and the ugly. And so we use that as a case study to say, okay, well, I'll tell you, I didn't do it actually, but when this coin, the Phoenix token, first came out, it was 0.00010th of a penny, and so there were people that put $1,000 up and bought just straight up bought $1,000 worth of it, and then ended up making like $200,000 in a short period of time, like a week and a half. So it happens. But the beauty is that the Phoenix token has a utility, and that utility has a value. That value is what, we're hoping that we can sustain and allow us to, have increases in the value of the token, which would mean obviously our portfolio would grow and we'd be able to sell those tokens on the open market whenever we want. There's other ways that you can make money there as well. Like I said, with the nodes, you can make it with buying real estate. You can make it with, God knows what else they're doing. They seem to come out with something awesome every single week. But at the end of the day, they're still in the development stage. So it's kind of like a pre-launch or this pre-IPO, almost kind of like what James was talking about just now. So do you get involved early? Maybe. But the whole idea is that it's been brought to your attention the same way that James brought what he said to your attention. I'm involved with Miracle Cash and More, as full disclosure. And so I'm hopeful that it will grow. And if it does grow, then this was an opportunity that would have been not necessarily similar to Bitcoin, but it would be similar to the opportunity of me being able to say that I got into something early enough, like Dogecoin or whatever, and it grew. And if it grows and you can say that you made a profit, fantastic. But again, this is an opportunity where you would be giving your money to an exchange, trading for coins and a coin that's on the market. So that's a little bit safer, right? Doesn't have to be, but a little bit safer. And then number two is there is an opportunity for you to give the company money to like be an investor. However, you really need to do your due diligence. That goes a little bit against the core 4 principles of self-custody of funds. And I think you could do just fine with the Phoenix token. But as you explore and learn more, then maybe you do more. That's not my choice, but I do want to hear about your journey and learn about it because I care about everybody here that is in our core 4 community. I care for your success. It's not easy out here. There's lots of different things, just like Chris gave a phenomenal explanation. I never thought about it. It's not the politics, it's the policy. And so trying to navigate that space, but you guys have experts that are helping you and me and themselves to get the ideas of others so that we can make the best decisions for our family in the future. I do want to give you guys a case in point. I have a friend that I don't want to say friend, just somebody that's in the business. And what they're doing is they're just constantly investing in, these platforms. And they have no care about the core four coefficient, and that's okay. But at the end of the day, I say to them, I said, what is this all about? And so it's like, Brandon, we can really build a team. And is that really what I want to do? No, not right now. Not with some of the opportunities that are out there, especially in the crypto space. What I'm looking to do is help to build a community of people that really, really understand that where they are doesn't have to be the same in 5, 10, 20 years. You could be in a totally different stratosphere, but it's going to take a strategy that makes sense that you can deploy with consistent leadership week after week after week, time after time after time. And so Core 4 is here to help share with you what our journey is. And as you watch and as you learn, maybe you mimic. But guess what? We love you regardless. And thank you very much for joining our show. And we'll see you next week. Bye-bye.